Welcome to another episode of the CattleUSA Daily Podcast. Today we are welcoming back Dan Gerhold with the CattleUSA Insurance team. Dan has been coming on every week since we pretty well started this podcast, and we talk the cattle commodities market. What is going on in the world of the cattle market? Dan breaks it all down. We haven't talked to Dan in a couple weeks since I have been out of the office on vacation. We didn't get to chat with him last week. So this week we are catching up on 2 weeks worth of the cattle market and what all has happened over the past 2 weeks. What is happening right now? Dan breaks every bit of it down for us. So let's go ahead and hop into this episode with Dan. But before we do, if you guys could take a second to like, subscribe, rate, and review this podcast, we would really appreciate it here at the team. Now, let's go ahead and get into this conversation with Dan. Dan, welcome back to the podcast. It has been entirely too long since we have caught up and talked cattle markets, all the things. Happy to be back. How's life in Iowa been treating you?
It's been cool. Perfect cattle feeding weather. It feels like October, but we'll take it.
Hey, I love it. Honestly, after how hot it's been for the past few months, I'm not going to complain about it cooling down just a little bit. So
Yeah.
I'll take the October cool.
Agreed. Yeah.
Awesome. I love it. Well, what's going on in the world of the cattle market? It has been a wild 2 weeks. Catch us up. What's been going on?
Well, since we last talked, we've taken roughly $20 out of feeder cattle and I'd say probably 10 to 15 out of fat cattle. It was pretty rough there early this week and last week. Not what you want to see. The market's lower on no news. It's kind of hard to say that because usually the cattle market has news that takes it lower, but it's just the fact of the matter. There's not much bullish things we can throw at this market anymore. So we all know about the Mexican border being closed. We all know about the shortage of supply. We also know that here coming up September, October is typically not your strongest beef month. So the market's kind of deciding to correct early. So boxes have slid, call it $10 so far and expecting lower kills to follow. So we started pulling this thing back. To add insult to injury, we had the leverage to keep cash where it was and did not use it. So it's unfortunate, but cash has slid back 2.5 weeks now. I think here to this week so far, the little bit that's traded has been 237, 238. Not a lot of trade, but long story short, just not a lot of momentum to push this thing to new record highs. Coming off some big 248 numbers, now we're $10 lower than that. And I'd like to think that here, maybe 2-3 weeks down the road from now, we hopefully find a bottom and start turning this thing around. The last 2-3 weeks, we've had really, really strong kill numbers. So if we keep the kill numbers at 120 or close to it, we could open up a pretty big hole here in November, December. Originally, I was thinking that was going to be October, November, December, but with the way the kills were this summer, I think they were able to back a few cattle up, looking at these weights and whatnot. So might be a big monster hole more so in November and December, but we'll see how it goes. So yeah, feeder cattle have just been unbelievably high in the sale barns. I mean, your 7 weights bringing over $4 a pound. I think I did see a few tickets where the 8 weights touched $4. That's pretty wild and crazy. I mean, if you think about it, $200 for a yearling steer. I mean, even some of the 9 and 10 weights, 3,300 plus, 3,500. A year ago we weren't even selling fat cattle for that. It's just remarkable. Same thing. We know the supply is shorter. We know a bunch of those feeders got moved early out of fear of missing out on a good market. And now all these feed yards that are profitable are having to fight over the same inventory. So that's a big reason why that's going on. Since last week, I should say since that limit down day, we've started to see the sale barns soften up some, probably overall 5 to 10 off the high. I don't think feeder cattle are going to be a complete bloodbath, just from the standpoint there's not as many around. But same thing, September, October is typically not your strong months for yearling sales. There's plenty to go around. Feed yards are out picking corn. It's just not that time of the year. So I looked at open interest. We lost a bunch more open interest yesterday on a higher move. So that was shorts taking profit or throwing in the towel, saying they got a little bit of money back. So you don't like to see open interest leaving the market because that's not a good sign. Like I said, we knew it was high. We knew it needed a correction. Now we sit and find out or wait to find out if this is a correction or if we just made a cycle high. We won't know that for several months, in my opinion. So we'll see what happens.
Is there a reason that it started its correction early? Was there anything that kind of like tipped the pendulum the other way?
Overall, it wasn't drastically early. If you compare it to where boxes and the slaughter numbers were, it was maybe a week early. But at the same time, the Packers are profitable. I think what tipped the pendulum is probably back cash dropped, that $5 to $10, off its highs when we had the leverage. We lost that leverage because a lot of these Packers got enough inventory bought up. I think that's what probably tipped the scale. There was another headline, I believe a news reporter asked Trump about beef prices, and Trump said that beef prices will be coming down. That obviously, I would say that's spooked a few traders. It's just like when Trump says it's time to buy the stock market, and the next day it goes up, and now he's saying beef's going to come down. Here we are. So I don't know if that's the full-blown justification for it, but at the end of the day, we don't like being any headline, and all anybody's talking about on social media, on the major news outlets, is how high beef is. So hopefully it's just a correction and we can move past this as we get closer to the holidays.
Yeah. As we look out for like the rest of the month, the rest of September, what are your thoughts as we kind of prepare for fall?
Get the Draxon ready. Get the Zaprevo ready. These big temperature swings, we know it's thick calf season. So first and foremost, keep those coupons alive because they're worth a lot of money right now. Second of all, I would consider, if cow-calf producer, I would heavily consider looking out the next year and start protecting calf pricing. It's just, feeder cattle are going to be a product of the profitability in the feed yards. So if we start losing money up here in the feed yards or down south too, all of a sudden that's going to come back and bite cow-calf producers, backgrounders, the grass man. So start looking out there. I would use this opportunity. Call us. We can talk through selling some options around your LRP if you just put it on or recently. Or even if you put it on too low, we can look at rolling your coverage up using put spreads. It's a great hedging strategy. If you put on LRP at 300 and now the market's at 330, you can roll your coverage up. Give us a phone call. We can walk you through that, show you how that works, what it looks like. Other than that, not a lot going on right now. It's just kind of the boring month of September. I think for feed yards, we need to be looking at getting feed needs booked up. The combines, the choppers, the crop insurance adjusters. I'm hearing more and more of this crop is not what it looked like from the road. I think you've got a pretty good opportunity here to get the physical bought here, especially, right out of the field, $4. I think that could wind up being a good buy. If we get futures to pull back, December futures back to 410, 405, I would look heavily at buying futures there. But overall, I would get feed needs purchased up, get them ready, or be ready.
What are we looking at on corn and wheat prices right now, or just the market in general?
The last 2 weeks, or I should say, 2 weeks has been pretty sideways and stagnant. Just kind of a wait and see game. Very, very common. It looks like we could have put a harvest low in back in mid-August. I'm optimistic that is the case, especially now seeing these yields aren't quite there. Wheat has been just brutal. There's no way around it. The wheat market is probably holding corn down right now. We get another month down the road, I'm going to look at the buy side of wheat. A person could look at call options on wheat right now if they want, but I would save some longs here for, 2, 3, 4 weeks down the road. I'd probably be on the buy side of wheat. It's just right now there's not a lot of news that's going to turn this wheat market, in a drastic way. So it's, like I say, boring September.
Yeah, absolutely. Anything else that we missed today that we need to hit on as far as the cattle market goes? Any other highs, lows, anything else?
I hear a pretty common question is heifer LRP doesn't work as good as steers. Said a lot of people don't quite understand their LRPs or their agents not explaining it well enough. Long story short, Lauren, is if the steer LRP works, so does the heifer, because the heifer LRP is just a 90% factor of the steers. So if you're looking at, stepping out to March and insuring a yearling out there, whether it's a steer or heifer, they work exactly the same. It's just the heifer is 90% of the quote offered by the futures market. The premium is also 90%. Then when we get out to your ending date, you take that 90% factor against that feeder cattle index, and that's the price that settles your heifer LRP. So really encourage, backgrounders especially, everybody's loading up on calves to run on stocks. Everybody's, filling their grow yards right now. We're going to be starting here as the calf run comes. I would really encourage producers to step out and look at coverage, because like I said, we were just selling fat cattle for this kind of money last year. So I don't want to see it go that way, that fast.
Yeah, 100%. So for the people that we're getting ready to get into fall calving, all of those things, and you were talking about covering your calves, what does that practically look like? Like, can you break that down of this is what that looks like if you have a calf drop, get coverage on it in 6 months? What does that look like for them?
You bet. Yeah. So if you're a cow calf producer that's fall calving right now, you can certainly do unborn coverage on the ones that aren't born. On the ones that are, you would put, lightweight calves on. You can go out 6 months. You can insure them as, 300-400 pounders for March, or you can go a full year out and you might insure them 600, 700, 800 pounds. But long story short, it comes back same rules apply compared to a yearling steer or a yearling heifer. It's offered, the prices are based on the futures month offered that day. The quote is, the premium is a lot of times based off what a put option costs minus the subsidy. So then, and we get out there to the end date, it's all about that feeder cattle index. So, if you're a 100 head cow calf producer that's calving right now and you've got 50 calves on the ground, you might step in and insure, 30, 25, 40 head, and then you might insure the other 40, 50 head is unborn and wait to see, obviously we don't know the sex of all of our calves, but if we can step out a full year or 9 months when your sale date would be, we know that we've at least got a good market locked in for one more calf crop. So kind of a big deal to me. We've never had this opportunity as a cow calf producer to step out a full year with these kind of prices. So don't miss out on it.
Yeah, 100%, especially when we were just talking about the fact that fats were selling for what yearlings are selling for right now last year, and it's a crazy market out there, and it's extremely unpredictable, and we had no idea that we could predict the fall was going to look like what it looks like right now, and we had no idea we were going to have the spring we had, and we have no idea what next year is going to look like. So it's one of those situations that's kind of protect yourself, protect your operation while you can, and while things are still positive and numbers are still high enough, getting all of those coverages kind of in your back pocket so that you're prepared in case something does go awry. Well, Dan, thank you, as always, for your time today, coming on, chatting with us. To all of our listeners out there, if you are interested in talking to the CattleUSA insurance team and just seeing what your options are, if you have any questions, anything like that, that link for you guys is down in the show notes where you can get a hold of the team and get on the phone with someone or email someone and just talk about what your options are and kind of go from there. So that'll be the first link down in the show notes for all of you guys down there if you are interested in checking that out. I would run down there and get a hold of that while you still can. So thank you to everyone listening. Dan, thank you for your time, and we will see you all tomorrow on another episode. Have a good one, y'all.